Greetings to you all. It's your boy Chartmaster here. Welcome to Chartmaster FX, where we sanitize you with our standard operating procedures. Take note that this is not financial advice. There are risks associated in forex trading. So in order for you to be successful in this industry, you need to put the work. You need to put the work. You need to do your back testing. After completing your back testing, then you do your forward testing. After gaining confidence in these standard operating procedures, then you can be able to trade them. So the impactful patterns is one of the price approaching strategies. So that's the one that we are going to deal with for today's tutorial. Generally, this is the Chartmaster strategy. As you can see that we have the impactful patterns here, which is abbreviated as IP. So you can see the impactful patterns is one of our strikers. It's one of our strikers. It's one of the price approaching. So guys, as you know that in the pitch, only 11 players can get into the pitch. However, that limitation automatically puts other standard operating procedures on the bench. So yeah, the impactful patterns is on the bench, but it's a good standard operating procedure that you can be able to use to effectively trade. So I want to give you an example. The impactful patterns are used in the top-down analysis, which means you are starting from a higher time frame. Let's say you are starting from the weekly, you go to daily, you go to the H4, you go to the H1 up to M1. So what happens is that, let's say you are trading on H4 and you get your setup there. For instance, let's say you are trading the SDE, which is the significant demand engulfment. Once you see that there is a confirmation entry of a 3 drive, but as you know, maybe the stop loss is far away from your entry. So in that scenario, you want to be risk sensitive and you want to reduce your risk. You can be able to use the impactful patterns so that you can minimize your risk. So let's say we have the SDE here, then we have a 3 drive. Maybe the 3 drive is the goes and attacks and is the one who is about to score the goal. So you may wait for an impactful pattern. So the impactful patterns are used in lower time frames. So they can be used in M30, in M15, in M5, in M1. In all those time frames, you can be able to use the impactful patterns. So that's the issue, guys. Another example, let's say you are trading the Quasimodo, which is the QM. Then the fake out is about to go and score a goal here. So what happens, like we are in H4, but you see that your stop loss is far away from your entry. What you do is that you wait for a impactful pattern, either on M30 or M15 or M5 or M1, so that you can reduce your risk. So this is the significance of using impactful patterns. They help you to lower your risk. So yeah, guys, that's it on the impactful pattern. Let's go to the general information concerning the impactful pattern. So the impactful patterns are usually used for sharper entries in lower time frames, as I have alluded before, that you can use this standard operating procedure on M1 to M30. That's where it is more effective, since it is a confirmation entry. So it is used in those lower time frames. They can be used as confirmation entries, as I have said. However, these impactful patterns can be traded individually only on the time frames highlighted above. So you can also trade these impactful patterns alone, but these are not higher probabilistic setups, guys. I just want to show you something on our strategy. So as I have said that the impactful patterns is one of the strikers. You see, it's one of the strikers. So what happens is that once you just trade it, when it is a strike, you have a shortfall in your strategy because you don't have any midfielder here. You don't even have a defense, you see. So it means that the probability of success is low than when you have a defense and you have a midfielder and you have a striker. If you can have such kind of a combination, then you know that you are more likely to score goals here. So that's the disadvantage of trading the strikers alone or trading the impactful patterns alone. It actually works well when you trade it like it's a Quasimodo that is actually formulated on H4. Then you realize that there is a fake out on that H4. Once you get a fake out confirmation, then you go to the lower time frames such as the M1, M5, M5, M15. Then once you find an impactful pattern there, then you can be able to place your trade. So I'm just showing you guys that the efficiency of these strategies is different when we are applying the impactful pattern on the SDE or on the claw. Why? Because these are already higher probabilistic setups where you have a defense and we have the midfielders and we have the strikers, you see. So trading the impactful pattern alone might have a disadvantage, although you may be successful in trading it alone. So yeah, guys, that's the general information concerning this price approaching strategy. So let's go to the anatomy of the impactful pattern. So generally in this course, we are only going to look at 3 impactful patterns, which is the head and shoulder, which is abbreviated as HNS, and we have the Quasimodo, which is the QM, and lastly we have the Whipsaw Engulfing. That's the shortcut for the Whipsaw Engulfing. So guys, as you can see here, this HTF represents a higher time frame. So guys, if I have said on the conditions of the impactful pattern that there should be a higher time frame and a lower time frame. So let's say for instance you have decided to trade these impactful patterns alone. What you do is that you go to a higher time frame. Let's say for instance you are on M30. Remember, M30 is our highest time frame in this scenario. So once you go to your M30, you identify a valid decision point such as an MPL or a QM level, or it's a double maru. Once you identify those kind of patterns, then you can be able to go to a lower time frame, which is the M15. Then you wait for a head and shoulder to formulate. Then you can be able to trade. I just want to show you something, guys. As you can see on our Chartmaster strategy, the goalkeeper here is the MPL. So we have our substitutes here, the double maru and the Quasimodo level here. So as you can see, guys, MPL is our first choice. It's our first choice keeper. But however, the double maru can also do a good job, and also the Quasimodo can also do a good job. So those are the decision points that you need to look for before you place a trade. So yeah, guys, that's it, guys. So a head and shoulder, as you know it, this is a common setup in the forex industry. As you can see, guys, that we'll be having a low here and a higher low here and a shoulder here. So the principle is you sell here on the shoulder, then you put your stop loss above here. So this is the head and shoulder. This is the head and shoulder, guys, as you know it in its general form. So guys, as I have said that you need to identify a valid decision point on a higher time frame, and in this case our highest time frame is only M30. So you go to M30, you identify the decision point. For instance, we have identified the MPL. Then you go to a lower time frame, and once you find this setup occurring on the MPL zone, then you can be able to place your trade. So guys, example number 2 here, this is a Quasimodo again. So this is the Quasimodo, which is the opposite of the head and shoulder, in the sense that we have a low here and a lower low, which means a low here is actually engulfed. If you need to understand more about the Quasimodo, you can check the video on the Quasimodo, and also you can check the Quasimodo sniper video as well. You understand the principle of the Quasimodo. So the ideology behind trading this standard operating procedure is that you sell on the Quasimodo level here, the QM level. That's where you sell. So you wait for the price to engulf this low. Once this low has been engulfed, you wait for the price to retrace to the QM level. Then you can be able to place your trade here. Take note that this will be the highest time frame. So you go to your highest time frame. Let's say your highest time frame is M5. You go to M5, you identify your MPL. Once you identify your MPL or any other valid decision point, you go now to M1, and you wait for the price to come to that MPL of M5. Then once the price comes to that zone, then you wait for an impactful pattern. In this case, you wait for the formulation of the Quasimodo in that zone of the MPL. Then you can be able to place your trade. Another thing, guys, that you need to take note is that if you check your M1 now, let's say this head, if this head engulfs the MPL, then as the Quasimodo is formulated, you must not take that trade, guys. You need to take that into consideration. That is one of the rules. The same applies here. Let's say this head actually engulfs the MPL. Then once the head and shoulder is formulated coming to this shoulder, that's invalid, guys. You don't place a trade. It will have violated the terms of the impactful patterns. So guys, the head of the Quasimodo or the head of the head and shoulder should formulate inside the MPL. And for you to get higher probabilistic trades, this shoulder should not touch the MPL if you want to have higher probability trades. But even if it touches the MPL, it doesn't matter, guys. It doesn't matter. The only condition that we don't want to see happening is to see this head actually engulfing the decision point. Once you see that thing happening, then it violates the terms of the impactful patterns. I think, guys, you are understanding what I'm trying to say. So let's go to whipsaw engulfing. On the whipsaw engulfing, the ideology behind this one, guys, is that we have a, let's say we have a rally base rally, as we will be having our rally base rally here. So we see here that this is kind of a fake out, in the sense that we have a kind of a resistance line where price actually broke this going to the MPL area. Instead of selling on the MPL area, you wait for the price to engulf or to have a clean breakout on this base, which means there should be momentum as the price breaks this. This base should not stop the price on the way back of the price, and it engulfs this base. Once there is an engulfment of this base, then you wait for the price to retrace to that base, then you can be able to place your trade. So guys, take note that the price should not respect the base on its first way back, and once it engulfs, it doesn't even respect it, then it goes to a certain level, then it starts to retrace. When it's retracing, that's where you can be able to place your trade. In this case guys, I would advise you that you can put your stop loss here to be risk sensitive guys, because if you put your stop loss here above the MPL, it might be a higher risk, because if the trade goes against you, then you are obliged to lose a lot of money here. So putting your stop loss here will be a better thing for you to do. And here you put your stop loss above the MPL area of that higher time frame. You put your stop loss above here of the MPL area. So guys, another thing is that you can also trade these impactful patterns. Let's say you have identified your MPL or any valid decision point, let's say in a higher time frame, like let's say the daily, and there's a Quasimodo or a head and shoulder impactful pattern that occurs in M30 or in M15 or in M1. You can be able to trade that, because you know that you have actually reduced your risk. Because in that case now, in that case, you will see that the MPL area or a decision point in a higher time frame such as a daily, it will be a very, very big zone. So what you do is that when you go to the lower time frames, you need to reduce your risk. You use the stop loss of that formulation of the Quasimodo. So which means if it is in M5, you put your stop loss just above the higher the head here. That's where you put your stop loss instead of putting above the MPL in a higher time frame, because you know that the risk will be too much. So in order for you to cut your risk, you just consider the stop loss in reaction to the higher high of that lower time frame that you are dealing with. But basically guys, when it comes to the impactful patterns, what I like the most is that when I identify an MPL, let's say in M15, then I go to M5, then I can be able to find an impactful pattern. Then I can be able to trade, you see. So once I identify a higher time frame, I go to the next lower time frame. But in some cases, you may identify your MPL in H4, it's fine, and you identify your impactful pattern in M1. Even if there is a gap, it doesn't matter. What you need to ensure is that you put now your stop loss on that lower time frame that you are dealing with, not to put it above the MPL of a higher time frame, because the risk will be too much guys. So yeah guys, this is the anatomy of the impactful patterns. So guys, these are the terms and conditions for trading the impactful pattern. There should be an MPL or any other valid decision points on the higher time frame. For example, when trading M1, there should be an MPL in M5. If you are trading M5, identify your MPL in M15. If you are trading M15, identify your MPL or any other valid decision points in M30. This is the philosophy behind trading the impactful patterns, guys. Okay, but generally, these impactful patterns, they are used on top-down analysis. That's where they suit the most, as I have explained before. But you can also be able to trade them on their own. They are also good. And the other thing that I want to say is that the Quasimodo impactful pattern is more effective than the head and shoulder. And the Whipsaw Engulfment is more effective than the head and shoulder. So this is the least effective one. And between these two, the Quasimodo is the most effective than the Whipsaw Engulfing. You need to know that, guys. So what I'm telling you, you can do your back testing and see what you come up with. But generally, when I did my back testing and forward testing, that's what I saw. That's what my data told me, and I came to that conclusion. So let's go on the impactful patterns. The impactful patterns should be in the form of an HNS, QM, or we, as I have said, the head of the HNS and QM should be formulated inside the MPL zone. For whipsaw engulfment, it is not necessary for the head to come from the MPL. So sometimes you can, even if there's no MPL, the head is not coming from MPL, we can also be able to trade it. So the enter on the shoulder QM or the flip of the IP. So I've explained that before. The stop loss should be above the MPL in which the impactful pattern is reacting to. The target profit should be at a clean demand. You are going to see that as we dive deeper and when we do our chart examples. So guys, now we are going to our chart examples. So this is example number 1, guys. We are on crash 500 index M5. So here, guys, the first thing that you need to do, let's say you trade your M5, you check in the M15. On the M15, you check for a valid MPL or a Quasimodo level or whatever you identify there, as long as it's a valid decision point. So this was in the MPL area of M15. So what happened is that when the price came to this MPL, it actually made an impactful pattern, which is the Quasimodo. The price came here and we have a low, we have a lower low. And when the price returned to this QM level, that's where you can be able to place your trade. And you put your stop loss above the MPL area there. That's where you put your stop loss. That's where you put your stop loss. There is also this impactful pattern that we call the diamond, but we are not going to look at it in this course. So what might happen, the reason why I said that you have to put your stop loss above the MPL here is because when the market creates a low and a lower low here, so you are now expecting the market to react on the QM level. What may happen sometimes that the price may actually ignore this Quasimodo level and go and engulf this higher high, ending up formulating a diamond, but it doesn't break this zone. So maybe it comes somewhere here and it drops, so it formulates the diamond. So that's why I say that you need to put your stop loss above the MPL, so that you can also take into consideration another possible impactful pattern that might occur, even if you are not covering it in this course, but you can apply it. If you check the diamond video, you can get the principle behind the diamond. Then you can be able also to include it in your notes and be able to look also for diamonds as you trade your impactful patterns. I hope it's clear, guys, to you guys. So here there was a fresh demand here, so we were expecting the price to react here, and when the price came here, it actually reacted. So this was the target profit. This will be your target profit, guys. So this is example number 1. Let's go to example number 2. On example number 2, guys, we are on crash 500 index on M5, guys. So as you can see, guys, that we have our MPL here of M15. So once you identify your MPL in M15, you go to your trading time frame, which is M5, which is a time frame just below that one. Then you wait for an impactful pattern. In this case, guys, this was a head and shoulder. Head and shoulder that occurred here. You can see, guys, this was a head and shoulder. So you put your stop loss above the MPL. That's where you put your stop loss. So you enter here, then your target profit is a clean or a fresh demand. Maybe you can target here or at this level. That's where you can be able to target your profit. So guys, this is the another example on Crash 500 index. So let's go to example number 3. On example number 3, here we are on Crash 500 index M5 again. So here, guys, what you do, you look for the higher time frame, which is the M15. You identify a certain valid decision point. Once you identify that decision point, what you do, you go to the lower time frame. Here is the M5. You go to M5, guys. As you can see, there was a Quasimodo that was formulated here. We have a low here, we have a lower low. So what happens that when the price comes back to the QM level, that's where you can be able to place your trade. These are the Quasimodos that I like the most, where the head comes and occurs inside the MPL area, and the Quasimodo level will be just below that zone. These ones, guys, I love them the most. I love them the most. So you can see, guys, that when the market came here, it actually reacted and it dropped. And you look for a certain decision, clean demand. Here's your target profit. Maybe you can take it here, or you can take it here. That will be your target profit, guys. So as you can see, guys, that as I was saying, that you need to look for a higher time frame, then you trade on your lower time frame. Let's go to example number 4. On example number 4, here we have an MPL of M15. We are again on Crash 500. Here on Crash 500, guys, as you can see, what happened here, the head actually occurred inside the zone of M15 MPL, and it actually created kind of a head and shoulder. You put your stop loss above the MPL area, because there's a possibility that there might be a kind of a diamond. Even if it's not a diamond occurs when it's a Quasimodo. But generally, guys, that's why I say don't have to put your stop loss here. It's very risky. Put your stop loss above the MPL on that time frame, of that higher time frame that you are dealing, and you know that you can be able to win most of the trades, guys. So this strategy, those who trade crash and boom, you can be able to use it on Crash 500 and Boom 500. You can be able to use this technique, guys. It works very well. You can back test yourself and forward test yourself. It's kind of a scalping strategy, because here I'm dealing with M15 and M5. It's kind of a scalping strategy, guys, that you can be able to use. Let's go to example number 5. On example number 5, here we are on range break 100 index M30. So guys, as you can see here, we are dealing with the whipsaw engulfing. So what happens in the whipsaw engulfing, guys? We have a rally base rally. So what happened once we have a rally base rally? So this kind of a fake out that I'm talking about. So as the price breaks, there should be a clean breakout on that base. As you can see, the price did not stop here. It came with the higher momentum to the downside. Once the price comes with the higher momentum to the downside, what we wait for here is that the price should come back in a form of retracement to the base. Then you can be able to sell, guys. So that is the condition for the whipsaw engulfment. You wait for the price to have a clean breakout. You wait for a clean breakout. Once you have a clean breakout, guys, then you wait for the price to retrace to that base, so you can be able to sell at the bottom of that base, and you put your stop loss above here. So guys, this one is another also impactful pattern that you can be able to use, and you can spot it. Let's say we are dealing with a higher time frame such as H4. Once you are dealing with that higher time frame, you wait for the price to create an impactful pattern such as the whipsaw engulfment in lower time frames. Then you can be able to place your trade. So generally guys, that's the impactful pattern. So here in example number 6, we are again on range breaker 100 index M15. So here guys, we have a rally base rally. So once we have a rally base rally here, we can see that there was a kind of a resistance here, and the price actually made a fake out. So when the price came back, it must come back with a higher momentum. It should not be stopped by this base, guys. It should just go straight without anything stopping it. Once it does that, guys, then you wait for the price to come back to that base. Once it comes back to that base, then you can sell at the bottom of the base. You put your stop loss here. So this one, guys, you can also use it as an impactful pattern. Let's say you are trading H4, and now you want to wait for another confirmation in the lower time frames. Maybe your risk is too much on those higher time frames, so you want to cut your risk, so you can wait for the occurring of the whipsaw engulfing. Once you see any whipsaw engulfing, then you can be able to trade it, and you have minimized your risk. So that's it guys for today's tutorial. I hope you guys, you are learning something. So this is kind of a top-down analysis approach. It helps you to have sharper entries in lower time frames, and it actually helps you to minimize your risks. So don't forget to like, share, and subscribe, and hit the notification bell so that you don't miss any of our videos that are coming. So yeah, thank you guys. Your boy Chatmaster signing out.